So here we go. The soft peddling has really picked up in earnest. Balance sheet reduction will not have any material impact, is their vision. But they are worried about this rolling over in inflation. David Bloom was with me yesterday. He wants a Ferrari. He would like a Bugatti. But what you want isn't necessarily what you always get. And they're not getting inflation. These are the break-evens, Nandini. It's now turning into a fundamental miss, isn't it?
Yeah, well, I think the Fed has two goals mandated by Congress: unemployment, getting it to as low as possible,
tick.
And inflation, not so much a tick, right? So that's the big question. And if you want to have that fully ticked checklist before, causing or changing what has been the longest and lowest, very low interest rate policy, you do want to be sort of with that checklist equipped to go for it. Now, I think, first of all, the balance sheet reduction, while it shouldn't cause drastic moves in the market, it is still going to move the markets, right? This is one of the largest demand for treasuries in the global markets is now reducing how much they're owning. It's not going to cause massive structural change in the yield curve or necessarily a huge fluctuation. However, we do have to be aware that the longer-term treasuries that are going to be unwound are going to be back out in the market, and that might cause some increase in the 10, 20, 30-year part of the curve.
It may make some moves. Try and help me with putting a parameter around that. Various people sit in your seat and they see 10-year benchmark getting back towards 3% in the process of rundown. Does that sound fair?
That does sound fair. Getting to 3% by the end of this year might be a little bit of a higher point for those yields, but let's say in the next few quarters, we could see very well a 3% 10-year U.S. Treasury, given that unwind and the fact that we do expect them to hike in December and continue hiking a couple times next year. Always data dependent,
yes.
But that is definitely in our projections for the next several quarters.